Crypto kids, adults, uncles, grandpas, grandmas. I think that Bitcoin is going to repeat history with its price action. I want to particularly look into a comparison from 2018 when the S&P 500 experienced a divergence from the price of Bitcoin, as Da Vinci pointed it out. I didn't know about this until Da Vinci posted it, so full credit goes to Da Vinci. I have been talking about the divergence which I personally see occurring between the S&P and the price of Bitcoin currently. In my view, and it's always been my view, that the S&P is currently in a rounding top formation. The price fractal from 1996 to 2001 is proof of that, and that in 2027, I see the S&P correcting rather steeply. Maybe not as steep as it was during the dot-com bubble, but steeply regardless. And we're currently in the formation of that topping process. Now, whilst the S&P is topping and the S&P has reached a brand new all-time high, I'm aware that Bitcoin is struggling and Bitcoin is very far away from an all-time high. And the fact that it's far away, right now by roughly 38%, is creating a divergence with the S&P 500. Now, I was in the belief, and I still am in the belief, that this divergence between the index of the S&P and the asset of Bitcoin is going to lead to a sharper decline on the S&P 500. How will it impact Bitcoin? I don't think not much. I think Bitcoin will ultimately follow the 4-year cycle until proven otherwise, which would mean that Bitcoin likely, I'll do some quick short-term analysis too, Bitcoin likely experiences its low in Q4 of this year, which would be Q4 of the midterm year. We're currently mostly on parity with the midterm year average. You can see that in April, price of Bitcoin usually goes up. Then, as they say, sell and may go away, because towards Q4, it keeps going lower and lower and lower. And eventually in Q4, you identify the low and you start going back towards the upside. Bitcoin is doing this perfectly. We're not dropping as much because there is diminishing returns and also diminishing losses. So I don't think that Bitcoin is going to drop as much as it did in prior cycles, but I see that the overall direction is going to be downwards all the way until Q4. We have the midterm elections. We know that President Trump is most likely going to lose the midterms. Losing midterms means more uncertainty for what will happen in the political landscape. And I think that will be the narrative that is attached to the drop, but Bitcoin will just simply be doing what it traditionally does. So I think that this divergence between the S&P and Bitcoin will ultimately hurt the S&P more so that it impacts Bitcoin's price. When we go to 2018, when we overlay the S&P and go to 2018, the cycle, the bear market cycle that we like to associate the current market with quite commonly, I'll show you why, I'll remind you of why. The S&P actually went to new all-time highs whilst the price of Bitcoin was creating new lows. So that divergence existed in 2018 also. And what did it do? Well, it led to the absolute low for Bitcoin of that cycle to be made in Q4 of the midterm year, so that same year. The S&P also went down, so did the price of Bitcoin. Why do we think Bitcoin's price chart in 2026 is very similar to the price chart in 2018? Well, take a look at the bull and bear market support band. In February, first week of February, Bitcoin has a catastrophic low, which then leads to a higher low. That pushes Bitcoin into the bull and bear market support band. You reject from it in June, July. You sweep the lows that were created in February, and in Q4 you go down, you mark the low, and then you start going towards the upside. Look at 2026. It's almost a photocopy. In the first week of February, you mark a catastrophic low, then a higher low is created, pushes you into the bull and bear market support band where we're facing resistance, and likely we will sweep the lows in June to summer, go lower in Q4, and then start going back towards the upside. That is the most likely scenario based off of the statistics, based off of the 4-year cycle, based off of cyclicality in general. It doesn't mean that it's what's going to happen 100%. No, it's the likely outcome based off of probability. However, I'm not I'm not waiting to buy Bitcoin in Q4. That's where people get it wrong. Most people in the bear market believe that prices will go lower so they don't end up allocating. In the bull market, they think that prices will go higher so they don't sell. Truth is, as an investor and trader, you need to be able to know when the asset you like to have over a long term, which I think Bitcoin fits into that bucket. Some assets you trade, but you don't invest in. I invest and trade Bitcoin. I think that $76,000 for what Bitcoin is of remarkable value. So even though I think that from a technical POV, Bitcoin will go lower in Q4, I am accumulating at $76,870. I will accumulate if it drops lower, but I'm accumulating today and I'm not waiting. Why? Because I think this is a very fair price for what Bitcoin truly will be worth in years down the line. I don't know how many years down the line it's going to reach $1 million, but I think it will eventually reach $1 million and go even beyond that. That's going to be the next segment in the video. But just to wrap up with the technical analysis, I think 2018 is very similar to 2026, which would mean that we go lower in Q4. And it would mean that in the short term, the probability for Bitcoin getting rejected at both the bull and bear market support bands, which is now resistance, and the bear flag is higher. We have a double top that's been confirmed on the 4-hourly time frame, which is something to be careful about. Can it get invalidated? Sure. If it does, how high do I see Bitcoin going to? I think Bitcoin can go to $83,700, which is the CME gap. I think we could even potentially go all the way to 85. The reason we went over 2 videos ago, we did volume-based analysis, which I will not repeat to not waste your time. I think we could go all the way up to 85 if it gets invalidated, but ultimately go lower afterwards. So that is the Bitcoin TA, and that is why I think Bitcoin is going to repeat history. It is based off of the midterm year. It is based off of 2018's S&P 500 and Bitcoin divergence and short-term TA. Keep in mind that the Fear and Greed Index has pivoted back into neutral. We have noticed that when in bear markets, when you go from fear to starting to feel a little bit bullish again, it is common that it's a trap and it leads to lower prices. Just be careful of that, and also know that all Bitcoin lows have been made in the 3rd quadrant of the Bitcoin spiral. We have just entered the Bitcoin spiral, and it's going to be somewhere here in the quadrant. It will likely be in Q4, but because this is the quadrant where the low is made, I would begin personally my accumulation from now and not wait for later. I will only buy more if we drop more. If you enjoy these daily videos, guys and girls, do me a favor and make sure to subscribe to the channel and destroy the like button on today's video. You did a fantastic job on the previous video. Let's see if we can reach 500 likes. If you're looking for a place to be trading Bitcoin and other cryptocurrencies, make sure to go to the links in the description to get the best bonuses available with our partners Weeks, LiveX, BTCC, Ubit, and Bybit. Links are down below. Bybit is the place where you can buy Bitcoin for the first time with things like Apple Pay and credit card. Check the links in the description if you want to start trading or buying Bitcoin for the long term. I think long-term Bitcoin is going to go to millions of dollars. Most people do not study money. We all live our lives in a predominantly capitalist society. We spend every waking work hour trying to attain more cash. But nobody teaches us the history of money and how cash was created, nor does anybody worry about cash's future, because it sounds like an absurd topic, but it's in reality the complete opposite. The current monetary system that we operate in today is bound to fail, and it's going to fail quite soon. The US national debt is sitting at 39.1 trillion. The world debt is sitting at hundreds of trillions of dollars, and nobody knows who this money is owed to because they actually create the debt themselves and they have to repay themselves. You may be confused. Well, it's true. When you go into debt, when the government is going into constant debts, which to fund infrastructure, to fund things, taxpayer money isn't enough. It's never enough. You loan out or you collect money from your people, not just via taxes, but also through bonds. But you don't make enough money from your country's revenue to pay back investors, so you end up issuing even more bonds. And from the new money that's collected, you pay off your original investors. So it's a big scheme that most people haven't woken up to, and you only wake up to it if you bother to study about money, which is the thing that you spend your life trying to get. And when you look into the history of money, you can see that throughout multiple times of history, currencies and money went through something called hyperinflation, where whenever you were faced with problems, instead of looking at debt in the eye, going through pain and struggle, you actually printed more of it to pay off your troubles. But that led to a period of easy and good times. But when it came to the end of those times, it was a complete disaster and economic catastrophe where you reset and you have to rebuild. Warren Buffett has a famous quote where he states, "I can end the US deficit problem in 5 minutes. You just pass a law that says that anytime there's a deficit of more than 3% of GDP, all sitting members of Congress are ineligible for re-election." Of course, that would solve everything. If the deficit was going out of control and you couldn't pay back your debt, then, and you had the law that Congress people cannot be reelected, everybody will be focusing, like a CFO, on the balance sheet to make sure your P&L is positive, or you're trying to reach break even. But that's a tough job. It's going to require so much work. They had the Department of Government Efficiency, which was a smart initiative, but silently for the past 2-3 months, it's been completely abolished. It doesn't exist anymore. And on top of that, the current administration went into war. War and interest payment are the two things that increase the national debt at the highest pace. And this is going to keep going up and up and up. So would you rather look at the debt in the eye, cause economic hardship for 1, 2, 3 generations until you reach a point where the 4th generation is finally sitting afloat above the debt? Or would you just continue pressing your magical button and print more money to solve your problems? Of course, you're going to print more money to solve your problems. Even if Generation A was to decide to go through that hardship and try to pay off the debt, I guarantee you Generation B will just go back to the money printer. Tough times create tough people create good times create, hold on, I think I messed that up. Tough times create tough people create good times create weak people, and weak people create tough times. It's a circle. If you have the easy way out button tempting you, chances are, even if your generation doesn't press it, the generation after or the generation after that will reach for it. And that's the truth. In the island of Yap, they had a currency where basically the bigger the boulder, the bigger the rock that you owned, the more wealthy and rich you were. An explorer came to this island by coincidence and noticed that their monetary system was not based off of barter. I didn't give you a pen in exchange for an apple. No, they had a medium of exchange, and it was based off of how large the rock was. Large rocks were rare, and smaller rocks were common. Smaller rocks were still able to buy you things, but larger rocks could get you property and whatnot. The explorer had a ship. Nobody on the island had a ship. He took his ship, went back to mainland, and decided to hack the system by bringing in a bunch of big rocks. He took the rocks, loaded it on his ship, arrived in Yap, and became the richest person in the island. He diluted the money supply with so many big rocks that the smaller rocks were suddenly not able to purchase anything anymore. So the lower income families went completely broke, and the wealth gap increased, and only the top 1% had all of the wealth. They had access to all of the bigger rocks. So they had to abolish that system, and that's called hyperinflation. Hyperinflation exists in countries like Venezuela, in Turkey, in Argentina. In Venezuela, they have to measure your Venezuelan bolivars in a scale and calculate its value based off of its weight. Can you imagine? They can't count the paper money anymore. They have to weigh it. In Venezuela and in modern day society, you can exchange your local currency for something stronger like the US dollar and decide to continue transacting with that because it's more convenient. But in older day society, in the Ming Dynasty, you couldn't do that. When the Ming Dynasty had hyperinflation in the 1500s, they had to revert back to silver. they had to start using hard money. The world operates in a digital landscape. You can't just start using silver and gold to begin transacting. You're going to have finite and scarce money, but it has to be accessible in the digital realm, unconfiscatable. The government can knock on your door and get your gold, but they can't take your Bitcoin. You can spend money, transact online with your Bitcoin. This is why I think that Bitcoin is a $100 trillion asset. And really, no matter the technical analysis, I think we're going to go to millions of dollars per coin. It's just, are you patient enough? And do you believe in it enough? So, guys and girls, that concludes today's update. I guess without meaning it, I had a double meaning for history is going to repeat for Bitcoin, both from a technical standpoint and both from a money standpoint. Hyperinflation that occurred in the past is going to occur again. And I think the winner is going to be Bitcoin this time. I think gold and silver will do fine because they have done so before whenever hyperinflation occurred. But I think Bitcoin is modern day gold and it's better gold. Thank you all for watching. Take care and I'll see you all very soon. Bye bye, guys.